Hello, Ashwin.
How are you?
A few days ago, last week, it seems that the market staged a rebound.
That's correct, Jesse. Actually, this is what we call a bear market rally. You see, the market needs space to pause itself after dropping so much. And that's exactly what happened last week. It was not the resumption of a bull market. It was not.
Yeah, the market calls it a strange thing, dead cat bounce.
That's correct.
It seems that things have become quite dull and people have lost confidence. Consumer confidence is low, and there have been red flags, rising up, suggesting that that might be a recession coming up.
That's correct, Tessie. You see, although we do not see a long recession, it doesn't matter whether the recession is long or short, it will still disturb the markets. And it now seems that even if inflation peaks, it is not enough to make things better. According to RBC, it says that fears of a global recession have become front and center, okay, eclipsing the inflationary concerns.
So there are one or two red flags like lowered consumer confidence and so on. What do you think? Could you elaborate?
As of last night, Tessie, two red flags have been merged. Red flag number one, commodity prices, oil, wheat, and copper, for example, are sliding at the same time over worries about a recession as they grow. Also, US crude in the Strategic Petroleum Reserve, what we call SPR, has fallen to its lowest level since 1986. That means energy prices will go up in a recession and commodity price dropping, but there's less money to spend, less money going after fewer goods, less money going after goods and services. You know, the Fed is increasing interest rates are remaining high, means everywhere you see the conditions will become tighter. Of course, as we say, in a recession, the poor don't benefit and the rich benefit the most because everything becomes cheaper and they can afford a recession. The rich can afford a recession. The poor can't. You see, and
red flag go ahead.
Number two, if you see the chart behind me, you look at the consumer confidence index, it has now, as of last night, dropped below 100.
So consumer confidence has dropped and also commodity prices are falling. Those are the two main red flags that suggest a recession is underway.
Yes, let me warn you, Tuesday's consumer confidence reading of 98.7 is the lowest since February 2021.
It doesn't appear very encouraging, Ashwin. As you know, this program is skewed towards the retail investor. Yes. So what do you see on the horizon?
So let me
good news at all?
Let me explain to you what happened last night. On Tuesday, 28 June, the Dow Jones closed 490 points lower after being up for 450 points. You see, this is a classic dead cat bounce. Okay. Yeah. After being up 450 points, it dropped 490 points. So
when will the market bottom out?
Those who must have think that the market is going to go up or whatever they must have bought when it's up 450 points and it comes down 490 points. This is very dangerous. That's why I said in my previous video, Jesse, when you say that I can do it myself, you cannot do it.
Yeah. You need to stay with a professional in times like these. Yes. So when will the market actually bottom out, Ashwin?
When will the market bottom? Let me tell you.
When would we see the worst of it?
Well, like we have said in our previous video, Bank of America says 19th of October. Okay.
Yeah.
Besides that, forget 19th of October. Besides that, according to Morgan Stanley, equity markets tend to bottom out 2 to 3 weeks before earnings revisions bottom. Okay. But here's the point. Morgan Stanley says the latter have not even turned negative yet. Means we have yet to see, before the market bottoms, we have yet to see earnings turn negative. So
that's not very encouraging.
More pain coming. Okay. UBS also stresses the importance of earnings. Okay. And says that its baseline scenario for the US is slowing growth, but no recession. So like we said, it's either slowing growth or no recession or very short recession and then a bounce from there. But our question to investors is, retail investors is, what are you going to do until it bottoms out?
Well, I have a bit of insight. I think the first thing is do not do this alone. Stay with a professional, stay with an expert. And because it's so volatile, we need your guidance, your expertise. Please share with us, how do we make money in this kind of market situation, Ashwin?
So like I was saying,
is there any chance of making money rather?
Let me elaborate. Until this market stabilizes, you need to do two things, right? If you're a new investor, you want to make money from a dropping market. Okay. If you're an existing investor who already is holding stocks, your duty is to make sure your paper loss doesn't increase further. Correct? Am I right?
Yeah.
So how do you do this? We have come out with a new index-based strategy that does not invest in individual stocks, does not invest in bonds, does not invest in the US dollar or the fear index. It's strictly index-based. Now, what is the meaning? In this index-based strategy, we will make money for investors when the market goes up and when the market goes down. So between now and when the market bottoms, we can make money for you while the market is dropping. Yes, it's not a gimmick. Let me repeat.
So since March, things have become bad. It's been extremely volatile, aggressive interest rate hikes and inflation and recession. These are names bandied about.
Yes.
And red flag here, commodity prices dropping and consumer confidence dropping. And here you are saying there's an opportunity to make money.
Yes, like I said, Rasi, I repeat, we can make money for investors when the markets are dropping.
I would say the first priority is to stop the bleeding. So even for that, Ashwin, one has to be quite nifty. One has to be quite clever to, avoid the margin calls and to protect capital and then make money.
Let me explain to you, Tessie. Like I said, last night, our clients made 20%, 10 to 20% because the market dropped 490 points. Let me repeat. Last night, our clients made 10 to 20% because the market dropped 490 points. And last night, our clients' paper loss reduced because we were into a hedge that profited the client when the market dropped.
So you're saying hedge, hedge, hedge.
Not only hedge, no. For people who are already holding stocks, you have to do this to hedge your position so that your paper loss doesn't increase further. For people who are new investors, you can make fresh money when the market drops. This is not about hedge only. Please don't get it wrong.
Okay. So this is a new strategy. This is a new strategy that makes you money while the markets go down.
Yes. Like I said, it's not about hedge only. It's a hedge for people who are holding stocks already. And you can increase the hedge further, put in more money, and you can make money from a dropping market. Not only hedge. Let's not confuse ourselves with the word hedge.
So for those who are already in the market, who are facing volatility, they need to protect themselves. You could call it a hedge. But for those new investors, you don't call it a hedge, of course, you call it a strategy.
Yes. So even for existing investors who already have stocks, they can put in more money and increase the quantity of the hedge so that when the market drops, they are making profits.
Right.
Yeah, you can increase the quantity of the hedge to make profits as well as get protection from a dropping market. And that is the way forward.
Well, for those people who don't have the money, they just have to wait it out.
That's correct.
For those with a little bit of money, it is the more intelligent way to get ahead of the market and to recoup faster.
Yes. So let me give you some nitty-gritty elaboration. So we talked about this hedge. I'm not going to elaborate on this hedge because we are here to do business and we will elaborate more when you sign up. But on a calculation basis, so how much does this hedge program cost on a trading basis?
Right.
It costs $400 for every 20 units bought. Okay. So for every 20 units you buy, it costs $400. If you buy more, you make more money if the market drops. So I'm just giving you the ballpark figure. But to invest in this whole program of based on index strategy, we call it, not physical stocks, not bonds, not US dollar, and not fear index, our minimum investment or committed capital is 75,000 US.
Okay.
And let me add one more thing. We can also make money for you while Bitcoin is dropping or going up. If you want to add the crypto element to it, then 25,000 more, so total 100,000. Let me repeat. We can make money for you when crypto goes down and goes up. Think about this. Right now, people are holding Bitcoin. They're losing money when it drops. We can make money for you when Bitcoin is dropping.
So this is what you call the index strategy.
That's correct. It does, and our Bitcoin strategy does not involve the buying of physical Bitcoin, nor does it involve the buying of Bitcoin-based companies. It's a totally interesting strategy.
And if we wanted to engage with you in this program, we would need a committed capital of 75,000 US.
Yes, if you don't put in the crypto element, it's 75,000 US. If you put in the crypto element, it's 100,000 US.
Okay, and that is apart from those who are already investing in other equity stocks with you.
That's correct. Now, of course, we have private clients, we have other people. But if you want to buy individual stocks, of course, you put in more money, you can buy individual stocks. Then we can plan a whole program for you that involves individual stocks and index strategy. That will require 150.
So tell us again, where does the committed capital go? What would we need to do as an interested party?
The committed capital goes into your account in your name at the online broker that we will tell you to open an account with. So that committed capital will be used to trade the index strategy. Okay, we will use a committed capital of 75,000 to trade the index strategy, where we will make money for you, I repeat, when the market goes down and the market goes up.
Yeah, and it's also good that you talk to each individual investor to ascertain their risk appetite, risk reward, and so on.
A bespoke tailor-made plan.
So you will be speaking to each individual investor, learning about their preferences.
Yes. When they come in, we have to speak to them. They have to sign a power of attorney to give us the authorization to trade for them. Everything is elaborate. It's one-to-one, one-on-one.
Right. So how do we contact you, Ashwin? How do we call you?
My email is ashwin@ppchk.net. And on WhatsApp, we're available at bit.ly/algotrader. And on YouTube, we're available at bit.ly/algowealth, where you can watch our videos.
Right. I would suggest everybody who's interested, give Ashwin a call to discuss this one-on-one.
Let me tell you something else before I sign off, Jesse. Every investor in this world who is right now holding stocks, they should have a program. Let me repeat, they should have a program where they make money when the markets are dropping. It doesn't matter at this point whether the recession is long, short, whatever. Until earnings hit negative, until markets bottom, what are you going to do? You're going to sit down here and watch your paper loss increase? That is the foolish thing to do.
But if you pull the camera back, you see there's a great opportunity to buy cheap, isn't it?
No, buy cheap is one thing. If you buy cheap now and the market goes on further, you're holding on to more paper losses. The best way now is to structure yourself, position yourself in such a way that if the market drops further, you will make money from here. And if the market bounces from here, you can make money on individual stocks or you can make money on index strategy. So
I see.
There's a lot of things to be done.
So you are poised
in
either direction.
You see, once we position you, you are no longer, I repeat, you are no longer at the mercy of the markets. That's why we're trying to educate retail investors here. Right now, people who are holding stocks are at the mercy of the market. It goes down, you lose more money. Why do you want to be at the mercy of the market? Why don't you ride that flow? If the market's dropping, make money from the dropping market. If the market's going up, make money. Do not be at the mercy of the markets. Take the market by the horns, bull or bear. I say this again, take the market by the horns, Jesse, bull or bear, and profit from it. Do not panic.
But you know, money is emotional. So I think that in order to profit from the market, as you say, requires a specific mindset
That's correct.
where, one is able to weigh the pros and cons and go in sure-footedly,
Yes.
with the expertise that it
Correct.
takes.
First of all,
rather than
we
getting
yeah.
butterflies in the stomach and then
Yes.
withdraw,
You see, many clients, when the market goes like this all the way down, they don't understand how we do it when we say we can make money for you when the market drops. Now, this is called positioning, what we call financial structuring,
But there you go, Ashwin. The consumer confidence is falling. This is what I don't understand sometimes with the markets.
You see, let me explain. Give me an example. This morning we read a report. Bed Bath and Beyond, a famous US home furnishing shop for towels and whatever. They are switching off air conditioning every day to save costs. That means that goes to show us that the US consumer now, because of inflation, is cutting back on non-essential spending. That is why
that's that bad.
Even Target and Walmart, they reported that people are not buying non-essentials besides food.
Yeah.
So what is happening?
It does look bad.
The consumer is cutting back. But like I said, it
presents an opportunity, doesn't it?
Yes. What are you going to do between now and the next 3 to 6 months if the market continues dropping? What are you going to do?
Yeah.
You have to put something in place. You can't just sit down there like a dead duck and say, okay, let it drop. I'll cushion the loss. That's an amateur way of doing things, frankly.
Yeah, I understand.
Make money from a dropping market.
But even though we're not so-called professionals, we are still retail investors. I think the outlook, the mindset, the premise has to be, we're going to do the best we can with the greatest expertise that we can find, So employ or deploy all the expertise, all the know-how you can, given this crazy market volatility, and make the best of it.
You see, one thing I must say, since you mentioned about expertise, any client who signs up with us, he's plugged into our WhatsApp research channel. We have a WhatsApp research channel where we hold the client's hand and tell the client every morning what's happening. In fact, 24 hours a day, we are sending news down the research channel. So the client is 100% aware of what is happening in the market.
Yeah.
That's another feature of ours.
Yeah.
We have a research channel where we tell you exactly, give you specialized research, which we pay for, by the way.
I would say your program is not for the faint-hearted. Your program is not for the people who are not serious about making money, who just want to play or to just want to punt.
When you say faint-hearted, let me elaborate. You see, market has become volatile since March 27.
Yeah.
This is not a buy and hold market anymore for those who have no money. Yeah. You want to buy and hold can. If the market goes down some more, do you have the capital to cushion it? Let me repeat, this is not a buy and hold market anymore. So
I'm saying you need the expertise.
Yes. So as professionals, we have to move with the market. We have to dance with the market. You can't just say, okay, market goes down, I'm going to wait and see what happens. No, we have
most people would have folded, Ashwin.
Yes. I have clients who on their own went to buy Bitcoin because they didn't listen to us, and now they're holding massive paper losses. Now, we did not ask our clients to buy Bitcoin. We are not. Let me repeat for everyone who's watching this video: we are not buying Bitcoin. We are buying. Let me make your head spin. We are buying crypto, but we are not buying Bitcoin. And we are making money when Bitcoin dropped from 36,000 to below 19,000. And Tessie, you must have seen your P&L. You make money that as well.
All I can say is I'm glad you're watching it for me, Ashwin. Yeah. You need a real expert and a good stomach for this.
We're not saying we're real
volatility.
We're not saying we're real experts. We are like the fishermen. Let me give you this analogy. I love to give this to clients. We are like a fisherman sitting down at the river there every day and telling people at 3 o'clock this fish passed, at 5 o'clock this happened, and at 6 o'clock this is going to happen, or whatever it is. We are fishing at the same river every day. So we know better than anyone else what are the conditions. We are like financial doctors. We look at all the lines, what's happening, what is the health of the economy, what's going to happen next. So now we are in this video warning people who are holding on to paper losses. There is a red flag. The red flag is falling commodity prices and consumer confidence is dropping. What are you going to do about that? Act on that. Let us make money for you from that. Let us make
Otherwise, they'll be
money
just
from the red flag.
holding on to paper losses.
Correct. So, I think it's a very
Scary.
important. But if
It's
people
scary. I've been there. It's scary.
we don't want to do anything about it, we just sit down and keep quiet, then we can't do anything.
Yeah. So I'm inviting all of you who want to do something about your portfolio. Please contact Ashwin. So Ashwin, I'm going to sign off now. I'll be speaking to you in a couple of days.
Thank you so much.
Anything else you'd like to say?
That's all. You can subscribe to our free algorithm newsletter ideas. And all you have to do is contact us at bit.ly/algotrader, drop us your email address, and you will receive our free algorithm ideas newsletter free of charge every day in your email box.
Thank you so much, Ashwin. We'll see you soon.
Thank you.